Okay, think we are live now on YouTube. It's loading up. So while we are waiting YouTube to load up, let me just text the community and let them know that we are live here. We are live. We are live. We are live. Okay. We are live. Okay, yeah, so I got the signal. We are live now. Just one sec, guys. All right. So good morning, everybody. Welcome to the live stream. Welcome. So today is the I call today the Fed Day because that's the only speech we are going to hear from the new Fed chair here this month until they go to the September FOMC meeting. So today is like Fed Day. So today is the Jackson Hole speech, right? So the Jackson Hole speech is a very important speech for the U.S. Fed chairs, usually in the month of August, in the absence of FOMC. They talk about monetary policy and things to do with the economy and stuff and what they are planning to do, right? So the market and market participants are going to be looking forward to the Fed chair speech today, and all the AI bots and algos or all the computers in the world, the supercomputers, are going to be scanning through the Fed chair speech to see if they can spot any phrases or sound bites that is going to trigger fear in the market or optimism in the market, right? So if the Fed chair, if the speech, usually what they do is that they publish the speech in advance, maybe like a couple minutes in advance. So what the computers and the algos do is that they scan through the speech very quickly. Now we have AI, so it's going to scan through the speech quickly and try to identify any things that are hawkish in the speech or dovish in the speech, right? Hawkish means that things that the market does not like and it going to cause the market to sell. And dovish is things that the market likes, like music to the ears of the market, and then it causes it to do what? Rally. So today, we are going to hear from the Fed chair, and that is going to move the market. So because of that, the guys that move the market, the hedge funds, the banks, and the smart money, members of the smart money community, what they will do is that they are not going to be using all their bullets. Their bullets is like their money, right? They're not going to be putting their money into harm's way when they don't know what the Fed chair is going to say. So they'll wait for the Fed chair speech first, and then from there they can position accordingly, right? So far the market is looking positive here. Is The market is looking optimistic and is green here as we head into the Jackson Hole speech here. So I'm going to start with the SPY. So the SPY is up, is green here today. And we got a gap up, nice gap up here in SPY. So yesterday SPY came here and then it topped off. So those that traded with us, I told you guys that SPY would most likely come here and top off, and it put in this like a more like a double top. So break above this level, which happens to be today's pre-market high. I'll just leave it as a level because it can change from now to the time that the market opens. So break above this level, 772, is going to lead to a squeeze, a push to the upside into this area, right? So this is the next target, then the next target. So here we are getting into the weeds of things because we are close to the all-time highs. So it's going to be small moves until we clear the all-time highs. Okay. So these are the levels that we should watch as we move up. Alternatively, if the if the Fed chair's speech is hawkish and the market does not like it, it's going to go down, and then we are going to get a break below this pre-market low here, and we are going to get into this area where we fill the gap. So we come and test previous close of yesterday, and we'll fill the gap, or it could be something worse than that. So typically, if these speeches are hawkish. I remember one in 2022. I was trading it. I remember very well. Powell, the former Fed chair, Powell. So going into the speech at the time, I didn't know that they were going to release the speech ahead of time. So they released the speech ahead of time, and then the SPY just went up with one candle. It just did like, I think, 4 points or something. So was able to scalp it. I thought, okay, I scalped some and I left some contracts, thinking that okay, it's going to follow through. Then, the Argos read through the speech and stuff, and then they spotted some sound bites or something that was hawkish, and then boom, it sold off. And that day, SPY sold off like more than 10 points. Right? More than 10 points. So when you're going to this type of speeches and stuff, you just have to take your time. You don't want to be in trades before you get in. If you are in, you want to take profit before 10 o'clock, before the speech goes on, because you don't want to be caught flat-footed, because nobody knows where it's going to go, right? Because sometimes the speech can be good, but one or two lines in it is just going to cause chaos, and that is going to cause the market to sell. So this here is going to be this gap fill. So what I think is that the Fed chair was appointed by President Trump to cut interest rate and stuff and everything, but he's not the only one that makes that decision. It's everybody's, like, it's the community. There are 12 of them from Fed governors and stuff. So one person cannot just cut interest rate like that. But I'm thinking that going into the midterms and stuff, I don't think this speech, if I'm on the betting side, I would say that it's going to come in benign, like something that is not harmful, right? So that it keeps the market rolling and we go to all-time highs. But anything can happen, right? Anything can happen. We'll see how it goes. So here, above this level, we are going to take longs and we buy call options. Let's look at this. Where is the stuff? Let's do this quickly here. All right. So we have the pre-market low here. Oh, it's just moved a bit. This one. So this is our pre-market low here. This is the high. So this level is going to be critical. This 772 level. It's been a break call. You see that yesterday it came here, and that's why it sold off, right? So I opened the iron condor position, and this was my strike. The upper strike was here, right? Because I figured there's no way SPY is just going to break out and go like that with the FOMC, like Jackson Hole coming. So it came here and then boom, it just sold off. All right, sold off to the downside. So this morning, what I think is going to happen is that we might get into a choppy price action because nobody wants to risk their capital here in uncertainty, right? They are going to wait to the Fed chair meeting before they take a stab at anything. So over here at the open, maybe we get a profit-taking pullback, maybe a pullback into this red line. If we hold this red line, then we are going to look to get call options. We get like 772 calls expiring Monday. Then we look to ride it to the upside, and we ride it back here to this area. Once it's here, you just pay yourself, and then if it gives us follow through, great. If not, no problem, right? So we are going to look at that. The goal is to get out of all trades before 10 o'clock if need be, or you just stay in cash and then wait and see what the Fed chair has to say. Okay. All right. So that's the so here you are going to get like a push, like you can get a quick scalp. If you are fast, you can scalp this to the downside, buy put options, scalp it into this area. If it gives you follow through, great. If not, then you can hold it and then you know, ride it to the downside. So so here in that case, we are going to get a 772 puts, write it here, pay yourself. If it gives you follow through, you take another profit here. If it comes here, this area is a critical area. You see that price came here, bounce, bounce, bounce. So once it come here, most likely it's going to do the same thing and it's going to bounce there. However, if we break below here, that's going to open the floodgates. We are going to go down to this gap area, pre-market gap, and then even something worse. Okay. All right, so that is SPY. Let's go to QQQ, the tech heavy QQQ, NASDAQ. 100 stocks are listed in the NASDAQ. So here, we also have a gap up here. So everything is gapping up. The market is optimistic about the Fed chairs meeting. So what you have to understand is that the stock market is a forward-looking asset, right, or instrument. So any movements that it moves is not something that is happening for today. It's moving into the future, right? So right now the market is thinking, okay, the Fed speech, the Fed chair speech is going to be something good, so it's moving up, okay? And if it comes in and it's a disappointment, we are going to get a massive sell, okay? So here we are going to look at this here. I'm going to look at this as this level here is a critical level. If you look at this here, there's resistance, 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 right? So break above here is going to lead to a squeeze or a massive rally to the upside. So there is a possibility that if the Fed chair speech is dovish today, we could come somewhere here. See this? 729, right? We could move rapidly, very fast to this area. And then over here as well, these are levels that we can encounter before we get to that target. So here, I'm going to look at this as area of interest, and that's what we are going to look at and use it to trade accordingly. Okay. So I'll leave this as that, and then we go to the intraday, and then we figure it out. So here, same like SPY. At the open, we might get a move to what's this? We might get a move to the downside. First directional pick is down. Try to hold this 50 here and then bounce from there. It's going to be, don't expect big moves before the Fed chair meeting. It's going to be 1 point, 2 points, that kind of thing until everything plays out well, right? And if we get a low, then we can get a break to the downside and we can get that move that potentially fills this gap. So there's a potential for us to fill this gap here today if that Fed chair speech is hawkish. Hawkish means that anything to do with interest rate hikes or anything to do with uncertainty, like a speech that is not certain, is just all over the place, then is going to cause the market to sell because market hates uncertainty, right? So here we'll look to get if we hold here, we look to get call options. If we blast through here, we'll look to get call options as well, 722 calls. And then here we are also going to get the 718 calls, right? However, if we break below here, we are going to look to get the 720 puts. And then here as well, if we break below here, we are going to get a 718 put. So depending on where we are going to trade, we'll figure it out. We'll figure out what strike. I'll let you guys know what strike I'm going to take there. So one stock I'm watching here this morning is Marvell. So Marvell, they had earnings. The earnings was, the earnings was good, but double beat, and also they what's it called raised their guidance. Raising guidance means that they provided investors with a better guidance in terms of revenue and forecast for the next 2 years, right? Ahead of the, it's not even 2027, even 2027 and 2028, right? The reason why the stock is selling off is that these stocks have high expectations. So if you come in and you beat the revenue by a few cents or something like that, or EPS, then it's like the stock was priced for perfection, and then the EPS beat was narrow, so the market did not like that and it came down. I think that this is going to bounce. I think this is excessive, so it's going to bounce. But this level here, 220 is a break wall support, right? 220 is the break wall support. So you see that all throughout the sell, it did not break it, right? So yeah, you see that this like this is the high of this day, close, close, high, high, high. So here it is a break wall. So as long as it holds this level, we are going to see some type of reversal. Obviously, there's moving averages congestion here. It might be a fight, but it doesn't really matter. I think if it wants to go, it's going to go. So next level is going to be here. This one. There's this level here. There's a number of levels here before we go into the 100 SMA. This. So I don't think we come to the 100 SMA today, unless maybe the general market, the Fed chair speech is hawkish, and then that's going to break. But this has already sold off. So buy the dip guys are going to step in today, and then try to push this up. Okay. So I think that when all is said and done, if the market is good, we are going to see a reversal here. So what I'm looking for what I call earnings reversal trade on this. So when this one they be going to the earnings, the IV was 400 and something percent. So once the market opens, like those that did earnings lotto, like the on the buy side, they are going to get what is called IV crash, right? So the if you look at this, so take a screenshot of this. You see, look at the cost of these contracts. Okay. So if the thing opens up like right now, these ones are going to go to like almost zero, right? It's going to go to 0.01. So that's called IV crash. So you take a screenshot of this. So this is the calls, and then you can take the puts, right? So anything that is outside this range is going to be IV crash. So these are the puts. So yeah, yesterday these were the puts. So here as well, anything that is outside that range is going to get IV crash. Okay. So in earnings reversal, what we are going to do is to scoop up the cheap contracts and then ride it up for it to gain. That's the way to play it. So here I'm going to look at this here, looking at least I think we can get like at least a 10-point move on this. If it starts to move, you get like a 10-point move, and then we get this here to trail above this level. We have this here, and then this here. So I like what I'm seeing here. I see buyers are stepping in because they've gone through the earnings report and they realize that this is overdue. Like this sell-off is unnecessary, right? So yeah, so we'll see here. So we'll look at this trade here. Look at Marvell. So Marvell is one stock I'm going to be watching. It's going to be one of my main watch for earnings reversal play to scoop up the cheap contracts and trade something expiring next week, Friday, okay? Or even zero DT, depends, right? So Friday sometimes I do zero DT depending on the stock and then the conditions, right? So here, I think at the open, we are going to get that pop that trades above here, and then we can get that push to the upside, okay? So we see here, price came here several times overnight and it bounced. So this 220 is the level, is the floor. Break wall, it's not going to break it unless we get a hawkish speech from the Fed and everything is selling off and everybody's scared, then it's going to break. But otherwise, it's not going to break. I think at the open, we are going to get like that squeeze to the upside, and buy the dip guys are going to step in. Buy. Okay. So yeah, I'm looking for um something like a 225 or 230 calls. 230 calls expiring next week Friday. Then we'll look to ride it to the upside. So that's my first trade. Next one is Tesla. Tesla likes to move on Fridays. Can we get a Tesla Friday? We will see how that works. We'll see how that works. Let's see. We're showing relative strength here in the overnight trading sessions and this morning as well. So here, so I see a nice trend line here. So if Tesla can crack this area, break above pre-market high, it has room to go up. Break above pre-market high, it has room to go up, right? Break above pre-market high, it has room to go up. So here we have this here. Okay, so what I'll do is I'll put an alert here, 358. Then we'll look to take a long on this. I like this. I talked about this in YouTube videos and live streams and stuff. We have this forming like a cup and handle. I think this is where the breakout is going to happen. So we could see Tesla at 365 sometime soon, next week. And then here we have this gaps and things like that. So if we can get a move to 365, that's going to be awesome. But I don't think that happens just like that today. But we can get a nice move. Okay, can get a nice move. So you see that SPY and QQQ are selling, but Marvel is not selling because it's sold off excessively, right? So it's showing relative strength here. So with what's the name? With Tesla, we are going to see if it can hold here. It's going to be dependent on what SPY does. If SPY is going down, then that one too is going to go down as well. Okay. So we are going to see what it does here. If it can hold here, we're going to see if we can get a reversal trade and get the 350 calls or 360 calls expiring next week Friday and not next week Monday, and then we ride it to the upside. Okay. Another stock is another stock here is let's see. Apple. Apple was showing relative strength this morning. Apple is showing relative strength. This is beautiful. This is a beautiful chart. So here, let's clear this off. Here I see like a trend line here. See this? It's a beautiful mini trend line, right? So you see pivot high, pivot high, pivot high, boom, we are here. So break above here is going to send this ripping, right? Going to send this to the heavens, right? This one. So if you get this move, so Apple is going to unveil their new phone. Like they are going to release their new I think it's a folding phone or flip phone or how do you call it? I've forgotten the name, right? So they're going to release that one in September. Apple likes to release new phones in September. So the iPhone Apple enthusiasts, that's a good time to upgrade your phones. That's if you are the type that upgrades phones every single year, then your and the new phone is coming, right? So you can go and upgrade it in September. And that's going to be they release it during close to back to school so that folks can, spend their money, right? Nice one. So I think you are going to get this breakout here. So I like Apple as for a push to the upside, and I'm going to have it here. So I'm going to watch Apple. I like this setup here, and we are going to look to trade it. Okay. So Apple, I'm looking for 320, 316, 3, whatever, like what type of strikes they have this 0.5 strikes. I don't like these ones. So 315 or 320 calls expiring next week can get the job done. Okay. So I like Apple. So Apple is going to be my watch. Market opens in 1 minute. So let's just get ready. So that's about it. I have other tickets, but let's just because it's going to be what's the name of that one? Circle. Circle is also another one that I want to watch. We traded it last week and it did not move and it consolidated and it misbehaved. So let's see. 97. 97, let us know. And then Coinbase. These are setting up for this chart does not look good. But anyway, I'm going to mark it here, set alert. 94. Okay, so market opens in a few minutes here. Let's go back to Apple. And let's see. So market has opened here. Let's see what happened here. Let's see what's happening here. So guys, in the So here, we have this trade here. Those that are in there, what's the thing? So this, you see, I told you guys that even if we didn't get it right, the IV crash is going to finish this off. So I'm going to take this off here, selling this here, closing this position, locked in profit. I should have sold it earlier on. I just wanted to show you guys. So that one, locked in profits. It went to 68%, but I hesitated to take it off because I want to show you guys. No worries. Let me go check out the other one. I have two accounts here. Let's see what. See, this thing is selling. So make sure you close that position. It should be green. Don't let a green trade go red. Don't do that. So here we have this one as well. Okay. So logged in profits on that. Logged in profits on that. So here what we did was that we took a trade where we, with the strategy that we trade, regardless of what the direction is, we make money, right? So it was a thing of beauty. So yeah, I said everybody should close it. So you should have closed it. I did it live here. So you should close the position, right? I mean, you can hold some if you want, because if at the end of the day this does not, because this is going down, you don't want to hold it and let it start breaking. So it went up to 68%, 70% green. So make sure you close your position and get it down with. Yeah, so here Apple is showing strength. So everyone that took that trade, you should be green. If you allow it to go red, then that one I can. So it's green here. I'm holding just a piece, like for the. I have different accounts. I'm copy trading them. Just hold a small piece and see how that's going to go. But the chunk of the position is off. Locked in profit. So here we have Apple showing strength here. Apple showing strength here at the open here. I might get a trade in Apple. Apple showing strength here. QQQ is selling off. It must hold this area. QQQ is selling off. It must hold this area. Okay. I like what I see on Apple. I like what I see on Apple. I'll just wait for the first 5 minutes candle to close and I'll take a position on it. I like what I see on Apple. Not sure what this one is doing, Tesla. Let's see. Oh, so Tesla likes this fake outs, this type of fake outs, right? It likes doing this stuff. So let's keep Tesla on the screen here. Keep Tesla on the screen here. It likes these fake outs. So yeah. So this one I've closed the position. Marvel, make sure you close yours if you are in that trade. Should be green. So those that took the trade, did you guys close green? Put in the chat if you close green on that trade. Okay. All right. Fantastic. So yeah. So here up Tesla is moving here. Tesla is moving here. Tesla Friday. Tesla Friday. Tesla Friday is moving here. I'm going to take a stab at it. I've not taken any trade. I'm just watching. Just watching to see what it does here. I think what I'm going to do today is a little bit different. So I like Tesla. Tesla. Whoops, whoopsie doopsies. Um, I like Tesla long. Let me see here. 360 calls. Because of the Fed meeting, I'm not going anything big. I'll take Apple. So first of all, I'll take Apple. Apple calls. Where's the thing? Where's the Apple thing? Let me look at the strikes. The strikes that we have here. Mm, mm. I wanted to take the 320, but I don't want to get stuck. All right. So awesome. So make sure you pay yourself, guys. Make sure you pay yourself. So that's a master class on IV crash, right? So you see that we not get the direction right, but we're still green, right? So for years I was trading those things where I used to get smoked with IV crash, right? So now I learned my lessons, right? Using a powerful strategy. You can go into the market using earnings and collect the juicy premiums. So yeah, last time what's it called on before Nvidia's earnings, we took a trade. Again, we used IV crash, was able to maximize on the trade. And then here as well, we used this one. That one, the direction was correct. This one, the direction is wrong. You still made money. So that's evidence of how powerful the strategy is, right? So you can execute on it with no hesitation. Okay. So over here, I think today the with the Fed chair thing coming up, I think that we have to be smart and not go take any crazy positions. If you are going to take a position, you just have to be nimble with it, right? Nimble position, and then or wait for the Fed chair speech, and then we can use that to gauge, right? That's going to come up in the next 20 minutes. So right now, I will stay out of all trades for now and wait for the Fed chair speech to come out. And then based on that, we can know where they want to send the market. Then we can position accordingly. Okay. So, so. QQQ pushing here. Robinhood. Still no Robinhood. Okay. SPY is squeezing here into that Fed chair speech. So we are getting that move. So here, I mean, I placed a long trade, but again, that's too fast. So if you guys should not take it. If you want to take it, then you have to be a scalper, right? So yeah, I got the pullback into this, and then took a trade here, just a small position, 772 calls. The high of the week in terms of expected move is 776. So SPY can get to 776 here today before the Fed chair speech. So don't these are small positions because in days like this is not going to move. It can just move and stall, move and stall, move and stall, and wait for the Fed chair's speech. So here we see QQQ as well ripping. So I'm in that 772 calls. 772 calls on SPY, expiring on Monday. Just a small, very small position. Nothing really crazy. So I'll only put in size after I know what the Fed chair has to say, right? So if you want to take the trade, just know that it's just like a small position that you want to take, or you just stay out, stay in cash, right? Cash is a position, okay? Cash is a position. That's the key thing that you have to know. So here you see that. So let's take the time to go through support and resistance, right? So you see here, QQQ came here and then it reacted before pushing here. So because it came here the last time, and what did it do? It went back. So here is going to be, they're going to battle it out. The bulls and the bears are going to battle it out until the time that one person wins. So if the bulls win, we are going to get, bulls are the green team. If they win, then we are going to get this to blast through and go. If they lose the fight, then it's going to come down. The red team is going to take over and push it down. So in trading, we have, it's a game of two teams. One team is red and one team is green. Okay, one team is red and one team is green. So here as well, we are looking at this. So as this is approaching this level, in order to know whether it's going to break, you need to see increasing volume. Okay, see this volume bars? It needs to be increasing, especially once it's getting into this area. If you see the volume decreasing once it gets in here, it tells you that nah, it's not going to break it. It's going to pull back. So that's what we are seeing here. We are seeing here this is going to go, and then what did you do? Is going to like this going to, what's it called, pull back here. So it can play the games for some time, but we need, in order for this to break, it has to get increasing volume. So these this volume bars here on the chart is not for decoration. Is we use it to check to see what the volume is, right? So you see here, this is rejecting. Why do I know it's rejecting? Because the volume is not increasing, it's decreasing instead. So it's going to reject, and it's going to push it. We can bring it here. Next support is over here. Then it's going to try again, try a number of times. If it fails, they're going to push it down to this area. So right now, I'm not just that small SPY trade. Just is even just one contract. It's nothing, right? I just took that one contract. Nothing to write home about. It's just one contract. I'm just waiting for the Fed chair thing to come out. Then I'll decide where to place my trades. I don't want to get smoked in the middle of a trade that technically is supposed to work, but because of speech from the Fed chair, it goes the opposite direction. Then you be caught flat-footed and confused. So members of a day trading session, if you're part of the day trading group, we already made money here this morning. So there's no reason to even be trading here today, right? But we're just going to wait and see what the Fed chair has to say. Then we can, execute. So we already locked in beautiful profits on nice profits on Marvell earnings trade. Marvel any straight. Marvel any straight. Marvel any straight. So you see what I told you guys? That this was going to hold, this 220 is going to hold, and it's holding so far. Is a break wall of support. Break wall, right? Break wall support. Break wall support. So you see this rejecting. So you have to understand, master your technicals, and know what your levels are. I know there are traders on social media saying support and resistance don't work. So I I want to show them this. So here we have this going down. So you see it's coming down here, coming down to this area. So this is like a mini support area. And then from there, you're going to see whether it's going to go. It's going to try again to see if it can go up. And then, yeah. So Fetcher mounts the podium at 10 a.m. Eastern. In the next 13 minutes, 15 minutes ish, we are going to get that speech. So I'm not looking for any type of big moves until that time. But SPY and QQQ are telling us that it wants to go up. So if that speech is good, we are going to get a big green day. If that speech is good and dovish, we are going to get a big green day. So that's what everybody's waiting for. We are going to see. If it's hawkish as well, market is going to come down crashing. It's going to come down crashing. Still holding that, what's it called? SPY trade, just a tiny piece, just a small position. 772 calls, 722 calls. Okie dokie. Okay, while we are waiting for the Fed speech, if you guys have any questions, you can ask those questions. Then I'll be happy to answer them.
Hello, Richard.
Yeah, go ahead.
So
So
I got my IBKR account. It's the first time I'm trading it, right? And I'm
mhm,
wondering when you want to build spreads on it,
mhm.
mm, do you have to have the new desktop app or you can use the old web app to build spreads?
Yeah, so you can use any of them. You can use the web, you can use
Mm,
the desktop, you can use Trader Workstation. So
okay. Do
it's
you, do you
about,
have a tutorial on it? Because yeah, I've been looking at it to I don't
yeah,
know
we
how to
we
go from the options chain to build those spreads.
yeah, I mean we can discuss that offline.
Okay.
Yeah,
Thank
let's
you very
discuss that offline.
much.
Yeah, yeah. So 9 minutes more for the fetcher to go live. So I'm all out of the long already. I took a profit here at this pop, so I'm not holding anything right now. Just waiting and chilling and waiting for the fetcher to go live. Um, where is this speech? Um, the Argos will let us know what's going on. Just trying to see if I can get the speech here. What's this APT? Okay. Once it goes live, I'll put the link in the chat. I'm just trying to search YouTube to see where I can get the live stream. No, I did not check NVDA today. Right now we are waiting for the Fed chair to speak, so I'm not trading anything, just watching because the market is not going to do anything until that speech comes out. Then we'll decide whether we are going up or we are going down. Then we can position, right? Yeah, I think it's going to be. Hmm. I don't think they increase interest rates. They hike interest rates in September. That's not happening. Maybe next year if inflation is still sticky and stuff. Let's go. Kevin Wash magic. Let's see it. Let's see it happen. I so we are going to miss the former Fetcher Power. He's usually very serious. Every time he's serious, right? He's serious and he knows how to deal I mean, with the press, right? Anytime they ask him a question, he's able to give those kind of very good answers. But this new Fletcher is still, he's getting accustomed to the whole like press conferences and stuff. But he's going to do well eventually, because Fletcher Power when he started, he was like that, right? Some of the questions he was giving shaky answers, but after some time, again, it's with experience, right? you can see how he's able to navigate the questions, especially when they are talking about things to do with politics and the president and things. He's always finding a way to be professional about it and answers the questions well. Alrighty, right. So Marvel, earnings trade took that one too in my account, posted here, almost at 8 something percent, almost 90%. Shows the power of the strategy, right? Okay, did the speech come out? Mm. The speech out? These guys are they broadcasting this thing? So in this type of trades, you can use any strategy called strangle to trade it, right? So that if the news comes and it's good, if the news comes is good, you sell you take the calls are going to print, and then if it's going up, and then the puts are going to go to zero. So we're still waiting for the Fed chair to go live. I'm just trying to see if these guys are going to stream it here. Once he goes live, I'll let you guys know. Okay, let me see. No, this guy's not streaming this thing. Okay, it's live now. I'm going to play it. Hopefully you guys can hear.
The right place, the right audience, for real engagement, ideas that matter. Innovation, as Kristen mentioned, is the conference theme. I believe the public and the markets understand that innovations and the conduct of Fed.
I'll put that link in the chat.
Stability alongside policy. So here's a quick overview of what I'll cover in my remarks this morning. Call it an outline, call it a trail map. Please just don't call it forward guidance.
Please don't call it forward guidance.
Questions we're asking at the Fed about the latest general
All right, guys.
Technology.
I put it in the WhatsApp group.
Might take the economy. Then
I'll put it here too. I'm using a different computer here. Let me see.
And the interaction between central bank and financial markets. Next, I'll present some of the key principles that I believe should guide the conduct of monetary policy. Finally, I'll give you my assessment. So first, I think we should try to prepare a bit for future policy. With the unchanging picture of the Tetons as our backdrop, we are here to survey an economic landscape that is anything but static. It wasn't so long ago, including in rooms like this, in the run-up to the crisis of 2008 and over the decade that followed, when economists and policymakers were speaking of secular stagnation, speaking of a global savings glut. It's a widely held view that it wasn't so long ago would sit on the sidelines for a very long time, because there just wouldn't be enough compelling investment opportunities. All the good stuff, you'll recall, had been invented, so growth would be low and slow. Well, times sure have changed. We've come to a hinge point in history, to borrow a phrase, a framing from my former mentor, George Shultz. To cite the clearest example, progress in AI, the 80-year-old name for the newest technology, has been faster even than its evangelists predicted just a couple of years ago. The potential for substantially higher
recording in progress.
Just trying to post this here. Where is the chat? So I just post the YouTube link in the chat here. I will get up this one, and then we'll get it to work. Get up this one. I'll go to it. So I put the YouTube link in the chat.
Labs alone at more than $100 billion, an increase of 500% from just 12 months ago. We at the Fed, we watch all this attentively. We recognize that AI is a new variable, potentially a new factor of production that will have consequences both for the economy and for the conduct of monetary policy. It opens up some major lines of inquiry.
NFP is coming out.
Will the application of AI cause a significant sustained rise in productivity across the economy? If so, when? Will token usage be complementary or competitive to labor? Will the next generation of AI models demand even greater capital intensity too? Or will the models themselves help devise a capital light solution? Among the other yet unknowns is the resulting market structure. Who gets to make the money? It's not obvious where the returns on capital will land or on what time scale. Early on, how much of the surplus goes to owners of scarce assets, the AI labs or chip makers or energy producers or cloud providers? Over time, how much of that value accrues to businesses and consumers? And importantly, what are the implications for workers and for the
So
employment
guys,
side of the Fed
we are
mandate?
getting
Likewise, we don't
Silva is selling off here. I'm not sure why, but that's only one.
Might there be a heterogeneity of tokens such that growing
Listen to
some
the
will
speech.
be paid for the access to the best models, those at the frontier? Will token prices for older models fall to the level of their marginal cost? Well, we'll be thinking through these matters with the help of a task force on productivity and jobs. My early check-ins with the leaders of that task force and the rest have been very encouraging. To be clear, though, their recommendations will come later and have no bearing on decisions we make in the current policy conjunction. But I believe that for future policy challenges, this intellectual investment today will leave us much better prepared for tomorrow. Next, let me say a word about forward guidance and its substitutes. As our task forces go about their work, as you might know, I'm not waiting to introduce innovations at the Fed to help make us fit for purpose. To highlight one example, I've set out to change the form and function of the Fed chairman's so-called forward guidance. You might know about my longtime discomfort with early pronouncements of future policy decisions. I much prefer another path, and now we'll make the case for it. Transparency in communications about future policy decisions is not an end unto itself. Communications must be in service to the Fed's paramount responsibility. What is that? That's getting policy right. Forward guidance as a regular practice was adopted by my colleagues and me during the global financial crisis. It was essential at the time, and we introduced it with much fanfare. But as with other legacies of crises past, I believe the practice has outstayed its welcome. In normal times, the role of forward guidance should be limited and circumscribed. Otherwise, it risks creating ambiguity in the name of clarity. Oversharing policy deliberations and overcommitting to future decisions can lead markets, businesses, and households astray. And I believe when policymakers make quasi-commitments on interest rates throughout the cycle, we inhibit our own freedom to make the right calls when it's time to decide. To get policy right, we also need to get the relationship right between the central bank and financial markets. The Fed needs clear market signals, as unfiltered as possible, from market internals, from the level and change in asset prices across sectors, the prices and trading volumes of Treasury securities, foreign exchange value of the dollar, cost and availability of credit, broad set of commodity prices. These and other indicators should inform the Fed's near-term outlook on economic activity and inflation throughout the business cycle. They should also reveal the state of broader financial conditions and the risks and uncertainties of the financial cycle. At the same time, market participants themselves should be tracking real information about the real economy. They should draw their own conclusions, form their own expectations, things like output and employment and inflation. And they too should stay sharply attuned to risks. In my view, the Fed should be humble and never naive. The Fed plays an essential role in the economy and markets. Our tools are powerful. We determine the path of short-term interest rates, and market participants will always try to anticipate what we will do next. But we should not indulge a regime in which market participants are looking primarily to the Fed for their next trade. The economic literature has long described the distorting effects, what it called the Hall of Mirrors problem. If markets rely materially on the Fed's guidance and the Fed relies on market prices, we're more likely to be blinded to new developments, more likely to be caught unprepared, and more likely to commit errors in policymaking. Now, perversely, market participants are unlikely to bear the biggest costs of the Hall of Mirrors problem. Most serious harm is likely to befall those without any financial assets. If the Fed gets inflation wrong, judges the economy wrong.
What happened there? Yeah, guys, I'm in silver, 63 puts, $63 puts. I have one expiring today, and I have one expiring next week. So I got this put city, and I'm still like the Fed chair's not finished speaking, so we I think gold and gold miners are selling off. That was something that I flagged here in our swing trading service. I was looking to short this, but it took a while for it to budge. So gold miners are selling off, and I think gold, that's why it's selling off. So here, where is silver going next? We have to know where it's heading. Like, let's get a sense of what's this thing happening here. Sorry, guys. I'm going to pause this. So we are heading into this area here, this support area. So this area where it's like a profit taking area, and from there we are going to go down. I think it's going to be bouncing here for some time. The next level is here. Then we have this other area. Yeah, so yeah, so we'll see what happens here.
How then chart a better path?
$63 puts, that's what I got. So I mean,
some key principles.
gold miners are selling off. Yes.
And then I'll offer my promised assessment of the economy. So let's turn first to principles.
So here.
First, I've noticed in this line of work, yesterday's news has a way of getting mistaken for what's happening right now. Challenge is to know the difference. In other words, we must interrogate reality. Make sure we're not setting forward-looking policy based on stale or inaccurate data. Nor should we rely on isolated data points. Trends matter most. The Fed's a decision-making agency. We make choices amid uncertainty, and the data upon which we draw must be relevant, contemporaneous, accurate, and as actionable as possible. Second principle. The Fed's actions are intended to ensure that the aggregate demand side of the economy is broadly consistent with aggregate supply. However, all we observe directly is activity. We never see and can only infer what's really happening on the supply side. Hence, evaluating the current and expected balance between aggregate supply and aggregate demand is imprecise. Third principle, there should be no misunderstanding. Fed's price stability objective of 2%, as measured by the PCE price index, is a firm, fixed target. Let me be equally clear about another aspect of this objective. Price stability is not self-executing, nor is inflation necessarily reverting. It's the Fed's job to deliver stable prices, no excuses. Fourth principle. The Fed also bears responsibility for maximum employment. Achieving both sides of our mandate over the medium term is not an either-or proposition. I do not believe the Fed's dual mandate works at cross purposes. After all, high inflation itself is very harmful to economic prosperity. Fifth principle. Short-term interest rates are the predominant tool to achieve the dual mandate. Unconventional policies to spur economic activity may suit genuine crises, of which we all have much experience, but they should otherwise be used sparingly, if at all. Sixth, money matters. I know it's not fashionable these days, but my view is that money has something important to do with monetary policy. We should pay attention to money created by the central bank and money that comes from the banking and financial system. It's true that financial innovations, subject of this conference, and other factors alter the mechanics that link the monetary base, the velocity of money.
So I took some profit here on this.
But that is scarcely a reason.
Did myself here
for
on this stuff.
ultimate effect.
Because this came to support. This silver trade came to support. So yeah, I'm watching what's by. I mean, so far the Fed chair's speech is that there's nothing really like hawkish about it. Yeah, so I think that eventually the markets will recover, but we just need to finish listening to it. So so we see we fill the gap and we are coming up here. So if we can clear here, then we can go higher to this level here, So we'll see. So I think we eventually go up, but we need to finish listening to the Fed chair speech and then figure out because sometimes there's other things in the speech that we might miss before we can take any trades.
Effects of money on financial conditions. It's a little ironic. There are no windows in this room, but they're big ones at the Federal Reserve. And we've been using those in my first 100 days. And I expect we're going to continue to use those in the period right ahead of us. Now, you may have read in the July minutes the unanimous view of the FOMC. Labor markets were stable, output solid, but inflation remained too high. A good majority of my colleagues and I thought the wiser course was to await new information in the intermeeting period, especially given possible developments in supply chains, investment flows, geopolitics, before deciding whether a change in interest rate policy was advisable. And we expressed our joint readiness to act as circumstances, require. For my part today, as we sit here, I'm impressed by the overall performance of the economy, which appears to have strengthened. One indicator of strength is how well an economy holds up under stress, how well it holds up under shocks. On that score, both Main Street and Wall Street have been remarkably resilient. Several other observations. Business CapEx is rising rapidly. The 4-quarter change in investment in equipment and intangibles has been around 9%, its highest growth rate since 2021. And more than half of the CapEx growth can likely be ascribed to the build-out related to AI. What about profits? For the firms in the S&P, profits have grown more than 20% over the past year alone. Profit margins are quite elevated relative to history. Overall equity and market volatility quite low. We're staying keenly focused on market internal, watching performance across sectors. Expectations for both growth in CapEx and corporate earnings are running quite high. Continue to watch the change in the growth rates, second derivative. Follow-on effects on asset prices, business confidence, consumer incomes and spending are equally important to gauge. Credit spreads on corporate bonds and leveraged loans are near the low end of their historical averages. And issue volumes this year, quite strong. Looking beyond fixed income markets to the banking business. In the July so-called SLOOS survey, banks tell us that standards for C&I loans are on the easier end of their historical ranges. Helps explain their growth that we've seen this year in these loans. In my view, credit and loan markets are showing few signs of policy restraint. Now, certain sectors, like housing and agriculture, are showing strains. But on balance, I would be hard-pressed to describe broad financial conditions as restrictive. Real consumer spending has been healthy despite these shocks, increasing more than 2% over the past 4 quarters. If you combine consumption with the brisk investment we talked about earlier, private domestic financial purchases have also risen. These purchases have increased at a pace of nearly 3% or so far this year. It's a measure that typically carries more signal than GDP. The trend here too, positive. So on the employment side of the Fed's dual mandate, the country's doing well. Labor markets are quite stable. The jobless rate at 4.1% remains low by historical standards. Hasn't changed much in a couple of years. Unemployment claims, a 4-week moving average, empirically robust real-time indicator, are near their lowest level in decades. In my view, the relatively low turnover in today's labor market is partly a result of the significant rematching between employers and employees that happened in the post-pandemic environment. But when labor supply is barely growing, monthly job gains are naturally going to run low. There are always areas of concerns in the labor market. For example, among recent graduates. In general, though, people want to work, by and large, holding or finding jobs. They may well be concerned about future labor disruptions, but as of now, I believe the labor markets are broadly consistent with full employment. But on the price stability side of our mandate, the numbers are more concerning. The Fed's preferred measure of inflation, the one I talked about earlier, 12-month change in the PC price index stands at 3.7%. The 6-month change a little above 4. The comparable measures from the CPI index are also elevated, as are core measures both of PCE and CPI inflation. None of these measures are perfect, but they all tell a similar story. Inflation is running above our 2% target. So the Fed's predominant focus right now should be on prices. So what's our job? The job for policymakers is to capture underlying trend inflation. Easier said than done. We want to gauge whether underlying inflation is rising, falling, or seems to be stuck in place. We also want to understand not just the direction of travel, but the speed. Each of these broad inflation measures have fallen significantly from their highs of a few years ago, but progress over the last couple of years has been more modest. And while this summer's PCE and CPI readings were better than expected, they do not tell me that underlying trends meaningfully improved. The data also show moderate wage growth, but in my view, when tracking underlying inflation, wage growth has not proven a reliable indicator of future inflation for a very long time. So to try to gauge underlying inflation, I want to tell you about a couple of things I've always looked to. Find it instructive to disaggregate the 199 individual components of the PC price measure. Over the last 12 months, 54% of goods and services in this basket showed price increases above 3%. This is well below the post-pandemic highs of about 77%, but it remains well above the level of 32 in a couple of the decades that preceded the pandemic. Looking over just the last 6 months, the conclusion is similar. 49% of goods and services in the PC basket showed price increases above 3%. Again, this is well below the post-pandemic highs, but still elevated, quite elevated. The recent rise in overall commodity prices also bears watching. What we need to judge is whether the trends we see indicate upside inflation risks. Now, it matters too whether the inflation readings of the past 5 years have seeped into expectations. The good news is that measures of inflation expectations in the medium term, by and large, look stable. And inflation compensation measures from the swaps market send a strong and similar message. Especially in light of recent developments, it's a credit to the Fed as an institution, consistent with the best of the Fed's traditions, that market prices show confidence that we will deliver price stability. And I can assure you, they're right. The thing about market measures of inflation expectations in economic history, I know some economic historians in the audience, is they all tend to look really strong and durable until they don't. These expectations are not pushed around easily, and right now they are very well anchored, but they must be closely minded. And it's the Fed's job to make sure that inflation expectations do not get unanchored. Now, there is one signal nobody can miss. The responsibility for 65 months of sustained elevated inflation sits squarely with the central bank, and that's where it belongs. So here is my standard. We must be confident that underlying inflation is moving to our objective clearly and at sufficient speed. Otherwise, we have work to do. That's our job, that's our mandate, and that's our charge to keep. So I've covered quite a bit of ground in the last 25 minutes or so. Let me see if I can conclude this way. I stand here today committed to a discipline, not a decision. My Fed colleagues and I are hardly the first to hold these positions in a time of great consequence. We are determined to redeem the time by doing our very best work. For those of you that know us, you'll know the following is true. We take our responsibility seriously, humility, and with resolve. We know so much depends on the choices we make. Sound monetary policy helps households and businesses to prosper. When carried out effectively, it broadens and deepens the momentum of our economy and helps to secure America's leadership in the world. And I know that our country needs us to think carefully and act wisely, perhaps now more than ever. It's a tremendous honor to serve once again at the Federal Reserve. I'm truly grateful for the encouragement, good counsel, warm reception I've received in my first 100 days from my colleagues. I'm also honored and grateful for the views that I've gotten, solicited and unsolicited, from so many of you in this room. For that, and for your kind attention this morning, I say thank you. Let's get on with the rest of the program.
Okay. So Fed Chair speech is done. The speech is done. So I don't think it was anything. It's just the normal talking points. So yeah, so the Fed Chair speech is done. Right now, all what I had was normal talking points. Basically, the inflation target is still at 2%. They're going to work towards that. So yeah, so there's nothing really new here, nothing really like shocking, right? So I don't think it's going to make much of a difference. So I think that eventually we might go up. I think the algos and the AIs of this world and bots and stuff are going to analyze the speech, and then the smart money will decide where they want to take this market, right? But right now, we are in a downtrend, so we'll see if we can get a reversal. I think a reversal is imminent here. We are going to see a reversal soon. Then we can use that one to gauge and position accordingly, right? Okay, so that's the key. So right now we just watching, trying to see what's moving. So the speech is out and out of the way. So now let's get to work and see what we can get. Let's get to work and see what we can get here. Just waiting to see what happens here with the market, what's going to happen. So yeah, so the Fed chair speech is what is called a nothing burger. A burger that has nothing in it. A nothing burger, right? Nothing to worry about. I think we go up from here. So I'm looking to position up, just looking at a few things here. And then I would, once they decide to push it up, then we'll position accordingly. So if SPY can trade above here, you see where the blue line is? I'll look to take a long, get the 772 calls expiring next week, Monday. Then we'll ride it to the upside, right? So that's what I'm waiting for here. I just want them to push it up. Let's look at what the SMH is doing. SMH is down. What's the Mark 7 doing? Mark 7 is also down. So we need these two guys to wake up. I think we go up from here. So what I'm looking to do is, let's see, looking to open a long trade here. So I already took a startup position, 772 calls on SPY. 772 calls on SPY, expiring on Monday. Then we'll look to ride it to the upside. Okay. 772 calls. So I just focus on SPY. I want to take a whole bunch of trades here this morning. Just 772 calls. As we approach here, push into this, you want to take some profit off as we push in here. I think we go and take off, right? I think we go and take off. Let me take this off. So this is the high of the day. I'll move this here to high of the day. So here we are going to get this push to the upside. And also going to look to open something here. So 772 calls expiring on Monday. Marvel is looking like it's going to go up. It is going to make its way up. What happened to Apple? Apple too wants to go up. So where is this thing? Apple is doing its thing. So I think I'll get Apple as well. Apple is doing well. Apple, I'll get there in the money option here. 315 expiring on Monday. I'll take that one instead, because Apple is not a big mover, so you have to be careful when you are getting it, right? So Apple 315 calls is a good one. Apple 315 calls is a good one. So in 315 calls for Apple. 315 calls for Apple. Marvel is coming up. Coming up nicely. Beautiful trade on SPY. Beautiful trade on this thing as well. So SPY, once we get to this 773, I'll start trimming some contract stuff and hold runners. I think the target here this morning today is I'm targeting 776. That's the high of the day, expected move highs. So if we can get there, that's going to be nice. But I'll take profits along the way. Okay, so everything is expiring on Monday. So we have time with this stuff. Marvel 2 is pushing, as I told you guys. So Marvel, I'll get a swing trade on that. That's going to be like a swing trade. Because as I said, the sell-off was excessive. It's uncalled for, right? So something expiring next week or in 2 weeks' time, 230 calls, something like that, should be able to work. Next week, September 4th, at least minimum, should be able to work. I like to buy time on this type of swings, like to September 18 should be fine, but it's going to be ridiculously expensive. So yeah, so you can get what works for your account, but I think this thing is going to be trading here by end of day. So I've taken 230 calls expiring September 4th. Just a startup position, small position for now, and I'll add to it later. I like what I see so far. So Apple, as we approach this double top area, you also want to take profit here, this place here. Let me mark it, because you can put in a double top and frustrate traders, right? So here, as we approach here, actually, let me take this line from here, move this to this area. Like, this is what I wanted to do. So this is a place where you have to be trimming, taking some off. If we blast through, then fine, you can hold. Trim some off, host runners, and for a blast through into this 319, almost 320 area. I think we go here. We go here today. If things are good, we go here today. So holding SPY. As SPY approaches here, I'll take some profit off the table and hold runners. Beautiful trade so far. Beautiful trade so far. Let's see how it works out. Get it to go. Nice push on Apple. So trim some, pay yourself, take some profit off the table and hold runners, because this can put in double tops and frustrate you. So taking some profit off, holding some as runners. I sold half, holding some as runners here to see if we can break out. If we break out, then I'll add to it. I just want to be, I want to make sure I'm executing the trades here, because I don't want a situation where this gives you a double top and comes all the way down and waste time. I don't want any time wasting trades here this morning. So take profit. SPY is ripping. So SPY, I have two types of strike. I have one expiring today and one expiring on Monday. So we'll hold the two and see how it goes. So let's see if we are going to break this level here on SPY, on Apple. Are we getting increasing volume as we approach here? Go to the 2 minutes to get the move early. Okay, nice push on SPY. Beautiful. Beautiful, beautiful, beautiful. Okay, so I think we break, we go. So holding my runners on Apple, leave it alone. It expires on Monday, so we'll leave it alone here as we are pushing here. This looks good. Beautiful, beautiful. Yeah, hopefully next week is going to be better price action. This last couple of weeks has been awful, awful price action. Nice push on Apple. Nice push on Apple here. So hold the rest and allow it to roll up. Leave it alone. So here, SPY, you got to take some profit off the table and hold runners. I think we pushed to 776 here today. So I think we pushed through 776 here today. Let's see here. Fantastic move on SPY. Fantastic move. Nice push, nice push, nice push on SPY. Fantastic. Fantastico. SPY, let's go. Let's go, buddy. Amazon. Oh, Amazon is ripping, guys. Think Amazon had a. Oh, holy smokes. I had this alert here, this one. Look at this thing of beauty. Look at that. Absolutely incredible, guys. Look at this. That's a breakout. I'm not trading it, but if you guys want to trade it, you can take it. But my trade is focusing on SPY, and then I also have Apple too in the trade. So we'll see how that one works out. Apple is also breaking out of this sloping trend line. We need it to blast through. So it's coming. This area here is the squeeze zone. If we can crack 320, like next week, it's going to do pretty well. Amazon is just ripping. Amazon is just ripping. Ripping to the heavens. Amazonia. Amazon forest. Amazon ripping. So Apple is both flagging here. I think we push to that 320 target today. Push to that 320 target today. Amazonia. So holding my SPY here. Holding. So here another profit target. You can take some off, but the what's the name? The 0DT one is at 100 and something percent already. Ripping faces. QQQ as well is doing well here today. So obviously everything is doing well. So I think that we go to the upper limit of the expected move here this week, 776. That's what I'm targeting for SPY. So that's what I'm targeting for SPY. Yeah. So we'll see how that works out. So make sure you take some profits here at this level for SPY, and then hold runners. I think our ultimate target is 776. 776 level, ultimate target. 776, ultimate target. Amazon too is ripping to the heavens. I don't like to chase this type of trades. If I missed it, I don't chase it. Let it rip. Let's go. Let's go. Let's go. Let's go. So Apple is approaching that target of 320 is a critical level. So make sure you take some profit off the table there. But hold runners. Do not sell everything. So here is a critical level. So make sure you peel some in as it's pushing into that level, because it's going to pull back. Just see here. Nice push on Apple. Beautiful. Beautiful. It's no beauty. Beautiful. So I'm holding my SPY trade with diamond hands, right? Targeting 776. Diamond hands, right? So do as you wish. I mean, at this point in time, everybody should be green on that trade. Nicely green. So I'm holding mine, targeting the 776, and then holding Apple as well. Took some profit here at this 320 at the profit target. Then yeah, just pushing to this. So 775 profit target, 776 profit target as well. Nice move, nice move. Let me go to the 2 minutes. I need to see everything. Everything that is going on, I need to see it. I need to see them. Nice, 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 nice trade. So here is what I have. These are the two trades that I have. Is in this trade, this. So I have Apple here, and I have this one, right? 772. I just have this 0DTE trade. Okay. Up by 2 grand. So continue holding for it to hit my target. Continue holding them to hit my target here. Then we'll see how it goes. Fantastic, fantastic trading there. Today I wanted to, with this type of moves, you want to go on the attack, right? So there are times that you can defend and there are times that you have to attack. Okay. So here we are approaching here. So why do I say 776 is the target? So here, can I take this off? Maybe, yeah, take this off. So yeah, 776 That's the place where price came last time and started going down, right? And that will form something like a head and shoulders, right? Something like a head and shoulders pattern over there. So that's I think we top out over there and then wait for next week. By next week, we should be at all-time highs. By next week, we should be at all-time highs. Yeah. So that's where we are heading. Before then, let's see what level is this. 774. Okay. That's a break wall as well. This here a pullback, potential pullback level. Yeah, that's it, guys. All right. So Amazon, Apple, ripping. So guys, let me know what you traded here. Down for the day, down for the week here. Need to sign out very soon. So the trades are done. You can hold your runners. So called out Apple, called out SPY, and also this one came in late. I did not enter this one. I've showed you guys the trades that I have, only 2 trades. Right. And then those of you that are with us, like who day trade with us like regularly, we also were successful in that Marvel earnings overnight trade. So that was a thing of beauty. So green across board. Let me know what you guys traded here, and let me know if you are green or red. So put in the chat if you are green or red today, and let's wrap this up. Let's wrap this up. All right. So, right, beautiful. So all green, nice. So what about the rest? What did you guys trade? Put your this thing in the chat. Put your the trades that you took in the chat. I'm still holding SPY. I'm still holding SPY. Still holding SPY. Look at it. Still holding SPY. SPY with diamond hands. This is 0 DT. I'm holding it. Yeah. All right, nice one. So if you guys can also take a screenshot of your profits and put it in the WhatsApp group, that's going to be nice, okay? So that you can encourage others. Put that in the chat as well. Not here, but in the WhatsApp group. Yeah. So here Apple is still moving. Apple is still moving. This has stopped out here, so can trim some from my SPY. Trim some from my SPY. It's looking 164%. So we'll trim some here because this tide is. Also trim some here, and then we'll hold the rest down for the day. Okay. Okay, guys, let me know if you have any questions. I'm done here for the week. It's been an exhausting trading week here because the market conditions were awful. Like it gave us a lot of headaches, but we were able to plow through it using our strategies that we use. In that is bulletproof across all markets, right? So we're still able to navigate the wicked consolidation market and come out tops, right? That's the most important thing. Okay, guys, let me know if you have any questions. I am done here for today. Apple, what a nice breakout. Massive breakout. Massive breakout. So Apple goes to this area here, this level 323 is a critical level, so it might go there today. Fantastic move. Apple and Amazon. Whoa, this is nuts on Amazon. Amazon. Did anybody take Amazon? Did anybody jump in? Holy cow, this is incredible. So you see how, so this area is called a squeeze zone. See this trend line here? Every single time price has come here, it has failed. So anytime this gets a chance to take off, it's going to rip, it's going to go. So this is a squeeze zone, like it's like a ticking time bomb kind of thing. And because there are a lot of guys that have been shorting this, they loaded up their shorts here. So once this takes off, they are going to get scared and they have to cover. And then there are those that are buying genuinely, and then that's just going to set off and go. Take off and go. All right. Okay, amigos. Done here for the week. I need to sign out. It's been as I said, it's been a crazy trading week. The price action was just very crazy, like crazy week, right? Yeah. So those that traded with us, you guys know that the last couple of weeks has been crazy, but we still come out green. That's the most important thing. Consistency, right? We have to come out green. And we also size down in those choppy markets. So I'll also take a look at where the VIX is right now. VIX is the volatility index. Oh, what's happening to this stuff? Volatility index, the VIX volatility index. Now this stuff is frozen. Anyway, I'll check that later. So those that so if you want to join our service, so here we trading the Prop Firm challenge. So we are going through it. Everything is working out nicely. So if you want to trade with us live every day, Monday to Friday, this is what you need to sign up for. This is a service, right? This is the live day trading service. I think next week is going to be better price action than what we've had here the last couple of weeks. So I'm going to post it here. So if you want to sign up for our live day trading service, where you trade with us Monday to Friday, 20 days in a month, you come and subscribe here. So here, this is $97 per month and $970 per year. You get 2 months free if you buy the yearly package. Then we have our swing trading service. So in the midst of the crazy price action, we're still making money in the swing trading service. So here we have, so here if you are a busy person and you can't do day trading, what you need to do is that you can sign up for our swing trading service. So every week I provide subscribers with a short video on the key stocks, the top stocks for the week, right? So then you can execute on them. And when I take the trades with my money, I also alert it as well and let members know that I've taken the trade. Okay, and let members know that I've taken the trade. So last week we took IBIT. We caught that crypto rally before it started, and we're still holding that trade. So we caught that somewhere here. We're still holding that trade. And then we also have Robinhood. Robinhood is still cooking. Robinhood is cooking here. So Robinhood, you see this downsloping trend line is going to break out eventually. Once it break out, it's going to do a big move similar to what we've seen here. This one. See what we've seen on Amazon? Similar move is about to happen on Robinhood. Okay, so yeah, make sure you take profit off. I've taken my profits off. I'm done for the week. Sold SPY, sold Apple. I just want to close things, right? It's been a nice trading move here, so I just want to lock in and be done, right? So here, if you look at my stuff, there's nothing here. Everything is done. Everything is cleared off, done for the day. Okay. So over here, if you want to sign up for them, where is the thing? For the swing trading, I'll put the link here and let me know if you guys have any questions before I hop out. Okay, so this is only $47 per month. $47 per month, monthly, and then there's a yearly package. You get 2 months free. Okay, so this for busy professionals who are looking to get some weekly income from the market, right? So yeah, we're going to be introducing some new programs very soon, but we'll see how that goes. Add to the alert service and stuff. Okay, guys, let me know if you guys have any questions. I'm done here for the day. Done here for the day. So I think we still go to that target 776 here today. Our SPY just needed to cool off. It needs to cool off, so it's cooling off period. And Apple has, this Amazon, Apple. Go to Apple. Apple has hit here this level, 321. Hit that target, so now it's pushing. I don't think I have the right board. This is number 2. This is number 2 as well. Okay, guys. We'll catch you guys in the chat, and then we'll communicate, and we'll see you guys live on YouTube. And those that have not subscribed to our channel, please subscribe to the channel to support the channel, and also share the the link with your your friends and family that are interested in learning about trading and investing. And also, if you learned something here today, let me know what you learned here today. Put it in the chat, and also put a thumbs up in the YouTube live stream. Those that are streaming live. Like the video and hit the notification bell. First, subscribe, hit notification bell, and like the video if you learned something from here today. All right. Okay, guys. Let me know if you have any questions. I'll stay here for 1 more minute, and then we'll call it a day. Stay here for 1 more minute, and then we'll call it a day. Okay. Okay. All right. So have a great weekend. See you guys on Sunday live on YouTube. Bye for now.